Tex traders and to the wide investing community, and welcome to my weekly trading roadmap for the week starting the 27th of July 2015. So what I'm going to be going through today, as per every week, is some of the event-driven risks that we have during the week, and sort of building in a good trading plan, a solid trading plan around it in two of the main markets, the Bund and the Euro stocks, and maybe dabbling into some of the other markets to see if there's any sort of market structures that we can take advantage of this week. So just to start off with, on Monday, we've got the German IFO business climate and the US durable goods. And then moving on to Tuesday, UK GDP, US consumer confidence. And then Wednesday, we've got the US pending home sales and the US FOMC rate decision. So on Wednesday, really is where we want to be looking to possibly put down the majority of our chips. Even though there's nothing really expected, we should be waiting and be prepared for any potential outlier news events that might drive flow in the market, and we'll take a look at that shortly. We also have the U.S. 5-year auction on Wednesday. Just take a look at that because that comes in at 6 o'clock, just before that rate decision at 7 o'clock p.m. London time. So if you're looking to possibly position yourself, take advantage of any good risk-reward trades, keep an eye on that for that because that could drive a bit of flow just before that event. Coming into Thursday, we've got the German CPI and the US GDP, followed by the US core PC. So the German CPI, I think, is actually going to be pretty important, specifically if you're trading the core fixed income markets, such as the Bund. And the reason being is that we've recently had a pretty weak commodity complex as of recently, especially gold has been very well offered. WTI crude oil has been getting hammered recently after it broke that really key inside month that we've seen in the weekly wrap-ups. So been very, very weak across the board. Even the copper market's just been getting hammered. So precious metals, we've seen energy markets, some of the ags as well. They're really quite offered at the minute. So you just have to pay attention to these market dynamics because it seems as if there's sort of this deflationary theme starting to kick back in a little bit because that kind of took the back burner for quite a while. And it seemed as if people were ready to accept that inflation was going to start, ticking back up again. But we've seen actually that the market seems to be pricing in some sort of more deflation risks. Now, if that persists, I think these inflation numbers are going to be quite important because, like I've said in the past, anytime we've seen the core fixed income markets, for example, the Bund, when it offered down significantly, there was a coupling of both oil and the 5-year inflation swaps moving synchronously to the upside. And now that we've seen, oil and all the other commodities start coming off, well, if we start seeing these CPI numbers again start trending lower, I think that we might get that aggressive bid back into the boot again, and it's actually setting up quite nicely with the structure at the minute. So pay attention to this because that could kind of wake up the market a little bit. Of course, moving on to Friday, we've got the European CPI, so that's going to give us a more rounded figure around the Eurozone. But obviously, the German is going to be a little bit more of it's a big weight in the European CPI. I think 30% of it, if I'm not mistaken, something along those lines. So it does make a big difference. But again, the European CPI is also quite closely looked at. And then we have the U.S. Chicago PMI. Just before we get our month-end flows, our traditional month-end flows that we trade every month. So just keep a close eye on those month-end flows to see if there's any particular opportunities in the fixed income markets, and then we'll be looking at the equity markets to trade that flow into the cash closes. So let's just take a quick look over at some of the market technicals and how that pertains to some of the event-driven risks that we have this week, and see if we can build in a bit of a plan looking at those things. We're going to start off with the Eurostoxx 50, Eurostoxx 50 futures, and just take a look at what we saw last week and how that's kind of panned out and what we could possibly be waiting for this week. So obviously, to put this market into a bit of context, We saw a very rapid rally, very intense rally, something along the lines of 4 points to the upside, more than 4 points actually to the upside from this swing low here at 32.82s. And we did say last week in our while we were going through the roadmap, the fact that we had just rallied significantly higher, and the market's context obviously was above this big flag break. We've been looking at this flag for quite a while now, and we said so long as the market actually held above here, the context was that this market could continue trending higher quite aggressively. Now we've actually broken back below that, and we also talked about the fact that we had two major gaps, one fundamental gap and one technical gap. The market actually has managed to fill the technical gap, something that we were somewhat expecting just because of the major rally we've seen so far. That's filled in. The majority of the volume was spent, auctioning off that very low volume gap, and then we proceeded to trade lower and close back inside this flag. Now, what's interesting with this structure, obviously, we still have this gap. Whether this market wants to come and test this gap, I just can't know. Technically speaking, so long as we're holding below this flag formation, logically, we should rotate back inside it. However, I will know obviously that this has been a very sharp move to the upside. I do think on the way down there's going to be some strong buying areas. So that's something I'm going to be keeping in mind. Obviously, I've drawn in a fib because we've seen a very sharp move. We'll be looking at the 38.2% this week. We're looking at about 35.48 for that fib, the 38.2% fib. And just below that is a very key area I want to be, I'm going to quite keen on, is these 35.27s, and just above that at 35.31s. So from around these 48s down to these 27s, you've got about 20 ticks of an area that I think is quite prone to find some strong buying activity. So that's going to be, I think, an interesting area to see. And the only way you can really tell is when that low is made is when the buyers actually step in. What we've seen even on the way down last week was that it was quite a forced move down. Again, very similar to these forced moves we've seen down here. So a lot of absorption. Still seems like people are very willing to get involved quite high up. But I do feel as if we might have a little bit more, a little further down to go before we go up. So let's just keep an eye on the structure to kind of put that into our trading plan this week, and hopefully we can make a little, make some money off of this trade plan. Obviously, once we get back above this trend line, I think, the aggressiveness will probably come right back into it. Mind you, a lot of the trading in the morning of Friday was very indicative of a market that was looking. We had basically reacted off this trend line here. And it seemed as if a lot of market participants were very willing to get aggressively long into the highs here, but we never really found that continuation. And once all those buyers had to, cover, we saw a very, very rapid, strong move to the downside. So I think a lot of very keen buyers got caught out on Friday, and that's where we had that big move to the downside. In fact, on the way down, there was some really big buyers, 5,000, 4,000 lots in the bid just sitting there. Just literally taking anything was coming towards them. So just beware. We could see similar price action this week, and that could be quite interesting. Let's take a look at the market profile and see if there's any sort of intricate levels we can pay attention to. I'll take a look at the downside first. We've closed at this 35.79s area. Now the value area low of the previous week. Now coming into last week, we did say we had this very big volume and value cave. We did also say the fact that so long as we held below these 36.75s, the market was more prone or at a higher probability of filling this volume cave out and then testing the lower bound of that value area, which we did, but I think it happened quite late into the week, and you have to be quite prepared for that scenario. We did trade lower. Obviously, we closed down here. We've got the value area low of last week at 35.91. The value area low, 2 weeks ago is 91.96 is the value area low of last week. So what I'll be looking for coming into this week, obviously, if we can't find an offer any lower, and let's say we fake out a little bit lower and then come back inside and hold above 91s and especially 96s, I think it's fair to assume that we're going to try and rotate, and we'll um, probably get dragged up towards this VPOC. Very, very strong value here. We've got the VPOC here at 36.40 with the POC just below that at 39. The gap was at between 33s and 40s. So this area is, it's quite a strong area. I think um, if you're looking to, let's say, be short, you would probably not want it to get back above this area. But I think once we're back inside here, it probably gravitate towards this. Now, whether we get back above it, that really depends on how the market pans out. But so long as we do hold below this, possibly we could have an argument that we want to sort of rotate and find lower value. But as soon as we start getting back above this, I think it's fair to say we'll probably attack the value high of last week at 36.58. And really, if we're going to start trending, we need to hold above this level. So first key decision point is this area here at 36.40. Then the next big decision point is if we hold above these 36.58s and ultimately above these 36.75s, which we saw was a bit of a pivot last week. And then through there, looking at the levels, obviously 36.96, which is that high and value area high of that previous week, and the high of last week at 37.14s. That's the context to the upside. Now to the downside, we've got a weekly high at these 35.60s. So as a first initial area, we did speak about these 48s being a 38.2% fib. Also the low of the ends here. These ends are not supposed to be here. My CQG for some reason is pulling them over from the last week. But these ends are supposed to be the closing prints of the previous week, of this week right here. So this is just a large single prints, row of single prints of eyes and not ends. But in any case, there is a low of ends there in that week there. So keep an eye on those 35.48s. But the real area, and an area that I'm going to be keen on, is the 35.31s high of this week and the single print fills at 35.27. Now, also along with those 35.27s, we've also seen well, it was the previous high of that week before we kind of trickled up above there. It's the beginning of, pretty much the beginning of this buying tail, and the beginning or end, you could say, of this selling tail right here. So this is a really key little area for me. I think this is a very, very strong area. If we get here, I'm going to be keen to take part in this area, and I thought it'd be something good to point out to you guys if you are trading these equity markets. Below that, if we do get below that, I think possibly the aggressiveness of the buyers is not particularly there. Possibly we're getting a stronger covering, or maybe something's changing in the market. Maybe keep an eye on that, because that could sort of be changing how the market is really trading. Obviously, we've seen the market being so strong recently. If we can't hold this area, I'd be a little bit concerned with the buy, and I wouldn't be as willing to take too much part a little bit lower. I'd start getting a little bit skeptical. But having said that, we do have this weekly low at 34.92s and this value area high of that week at 34.98s. In case we do get that low, pay attention to those levels. They could be significant as well on any sort of major flush. Right. Taking a look over at the Bunds now. The Bunds, the way they're setting up at the minute, we did talk about this last week. We said overall the context looked as if we were going to start, finding a bit of a bid higher, just because we're holding back inside this trend channel. Keep an eye on the fact that we've got this inverse head and shoulders. So your left shoulder here, your head here, and your right shoulder just there. Put into context, that is the high, well, the all-time highs of the contracts, the Bund contracts in there. So put that into context. Obviously, if we start breaking above this, I think we could get some really keen buyers. Anyone that's been buying and bullish on this market, buying it, they're really going to want to to gain higher ground and put these shorts under some real um, pressure. And effectively, if once we take out this high here at 24s, and ultimately we have to take out these 33s, so I think these 33s have been a really key pivot point. So we've seen just in here, this was a major fib level. Once we came down, we came and tested this level here. It was a 38.2%, I believe. We couldn't get above it. We tested it once, we came off. A second time we came off. A third time we came off. We false broke it once, and then once we got back below it and tested it here, you can see we tested it just there at 154.33s and then just shanked. So it's a really key pivot point. We did come off these 24s. Now, for me, if we get through there and hold above there, that's going to be the real key signal that the market actually wants to begin, you know, something a little longer term, or at least medium term over the next couple of months to the upside. That's going to be something that's going to, give me that kind of confidence with a more bullish bias. Until then, I'm still quite neutral, to be honest. I don't want to, get too ahead of myself. But that's really where I'm sitting on this. Obviously, through there you're looking at these 155.13s, which you could see that was a really massive area. We did talk about it. Well, just as we got into that area, the really big base that we kind of vacuumed through, held when we hit it. Once we get back above these 13s, ultimately we should be able to take this whole value area out and test these 156.69s, which is the other side of this base. So just, looking at the structure, be prepared and keep that in mind. Obviously, any failures of this sort of pattern, this inverse head and shoulders, if we start getting really aggressive buying, but then a really big seller steps in at these 33s again, and then he really drives us right below the neckline again, be prepared for that as well. That's also a really nice scenario, because once we get through that trigger neckline again, I think we're going to see all those really short-term longs probably puke quite quickly. So I think we're in an area where we're going to get some good auctioning. So just be prepared. I think there's going to be some good opportunities if we get there. But ultimately, like I said, I think we do need to get above and hold above these 154.33s for me if we're going to be, changing a bit of that bias to the upside. Right. Bear in mind, obviously, just bear in mind we've got our neckline currently sitting at around 84s. So just bear that in mind tomorrow and in the week when you're trading. That'll change over the days. It'll kind of move lower as you go along. As you can see, the slope is negative. But 84s is probably the level we're going to be looking at early on in the week. So from a trading perspective, we've got the close of the week at 153.79. We have the high of the week at 153.94. That was just short of the target on the value area at 153.97. To put this into context, we did say, just to put this again into context from what we were saying last week, we had the market that closed back into this value area, this very big value area in here this week. In here on the left, you can see the value area low of that week was 152.43s. On market delta, that came in at 152.35s, and we were saying how if the market came and tested within that previous weekly value area, which the value area high was 152.70s, we said if we get back in here, don't get too ahead of yourself. Don't think this is just going to make its way all the way down through this value area all the way down. The first real area we're going to be looking at for support is 152.43s and 152.35s. Inevitably, we did actually find a very strong bid off of these 152.43s, so that kind of came to fruition. We headed up higher, held above these 152.70s, and then made our way all the way up and tested the VPOC of that week, which came in at 153.35, something that we did have in our plans from very early on in the week. We did say that in last week's roadmap, and then it pretty much got all the way to the other side of the value area. It didn't quite get to these 97, so I think early on, that's a fairly bad high for me. I think early on I'd be looking for this market to kind of take out this bit of this bad TPO high and test that. high there at 153.97. Now, whether we do hold above that, we'll see. Only the market will tell us. But mind you, if we do open up in this area, we're opening up with pretty significant gap, and the gap, when I say gap, I mean a gap from the value area. So opening up out of balance is what I should say. And the balance, the value area high of last week comes in at 153.35. That's just ahead of those 35 VPOCs. So, this is a strong, strong area. If we get back down here and we hold, that's a first real big clue if we're going to start, really giving a strong challenge on that neckline break that comes in at 84. So bear that in mind. I think that's a very, very strong observation. And then just below that, obviously, the real decisive point as to whether we're going to sink and fare our way all the way back to this value area low of the week at 52.72s. That VPOC at 53.20s is going to be really important. So keep an eye on these levels. They're going to be really quite important, and I think how they play out is going to really give us the context of how we're trading for the rest of the week. Above that, obviously, we have 52.24s, and we mentioned 33s on that candlestick chart. Now, okay, those are the real main levels on the Bund. I think one quick look, I want to take a very quick look at the U.S. fixed income yield chart. We're going to look at the 5-year T-note chart. And, a really interesting chart. I've just been talking about this for ages. It's been coiling for such a very, very long time. And last week, we had a test back up into this area at 1.724% yield level, which the previous week we actually had found a bit of resistance in yield, and we basically double topped at that level and then came off pretty sharply. So it seems as if this market's kind of coiling up into this little area here, but I just want to just kind of mention this again, because we're still just below this major area, 1.8 to 1.864% yield area, where we've just haven't been able to really find a decent close above here. Now, I think on any sort of situation where this market does find its ability to close above the 1.8% yield level, which will probably render it above this very big trend line in here that we haven't been able to close above. That's going to be a first, I think, a very big milestone in this 5-year increasing in rate, in the yield, sorry. And the next real target for me, once we close above here, is going to be all the way up at these 2.166%, which is the next real pivot point, just before that high there we see at 2.4, basically 2.4%. So keep an eye on this chart. I mean, I don't necessarily have a bullish stance in yield, a bearish stance in price, I should say. You're still pretty neutral because it's very, very much range bound, but we're on the cusp of potentially a big move. So bear in mind any sort of surprises. And then again, we've got the FOMC this week. We're not expecting anything, really we're expecting any decisions to be made either in September or in December, and with most people leaning on December now. But we know all these months are live, and really, in these ones that are don't actually have a conference, some sort of conference, or a press conference, I should say, we're not really expecting anything, and they've said in order for them to actually raise rates, they're going to have a press conference. But they can say we're going to have a press conference or a conference call or something. So in the case, for example, in a very, very outlier event, and this is extremely outlier, probably less than 1% chance of this happening, that we do get the announcement that the Fed is going to hold a conference or press conference on the meeting on Wednesday, you shouldn't even be thinking twice. Like, and this, I'm just saying this because for those of you that are trading intraday, if they announce that and you're not prepared for it, you might just say, okay, what does that mean? And then the markets are just flying and moving all over the place. Um, you know, if that kind of announcement comes out that they're having a press conference, just don't think twice. You need to just be hitting every market that you have limits in, um, with the expectation that the markets are going to shift towards a potential rate hike. Because why else would they be holding a conference or a press conference? Um, the markets are not going to wait. They're going to price that in pretty much automatically. So if you're trading, for example, if you've got limits in the euro dollars, you want to be hitting, your deck 15s, your deck 16s across the curve. Really, you want to be hitting, um, or even just hit your T notes short to the downside, or your 5 years. As you can see here, that's a really good yield play. Um, just bear it in mind, or even uh, short your Euro USD, because obviously the dollar is going to be just super powerful off something like that. You just be prepared for this scenario, because if something surprising happens, and I would assume that they're going to have to announce that to the press first. We're probably going to get a rumor um, of some sort if that happens. It's not going to be an official announcement. We're probably going to get a pretty, there's going to be sources. Someone's going to come out and say it. So if that does come out, be prepared. There's not really much to prepare for this Wednesday anyway, because there's no press conference, there's no, you know, um, economic projections or dots or anything of the sort. But in the unlikely event we get something like that, be prepared for that scenario. Just really, really quickly from a risk management perspective and a money management plan, um, not very many event-driven risks, on every single day. Obviously, the main event being the Fed. I've put a bit more risk allocation there because that's pretty high relevance, even though we're not really expecting much. I said 30% there. Monday about 10%, Tuesday 20%, and Thursday and Friday 20 and 20. I've actually thought now. Historically, I've put more weighting on risk allocation on Thursday, um, and sometimes Friday as well. Not so much as Thursday, but I've actually seen that the majority of the volume and the activity we're getting in the markets is actually taking place very early on in the week, and something's shifted there. In fact, Fridays have been very, very quiet. The only reason why I'm putting 20% risk is because we have month ends. Um, and really Thursday is because we have a couple of data points, neat little data points in there. But other than that, on any other day, I'm probably going to keep my risk allocation a little less towards the end of the week, and probably a little bit more on Tuesday and Wednesday, as they seem to be quite significant in terms of volume. Right. Well, thank you very much for listening in on my weekly trading roadmap. For those of you that are subscribed to our Futex Live terminal, live streaming terminal, I'm doing an FX and commodity stream on Monday, which is tomorrow at 12 p.m. If you're listening to this on a Monday, that'll probably be in a few hours. So just if you're not subscribed, then you can subscribe for free and have a free week's trial of that. Test it out and see if you like it. It'll be a little bit more specific, obviously, looking a little bit more intensely at some of the market structures. Um, and then obviously the next time I'll be on a stream will be on Friday doing my weekly wrap up. Same deal. If you want to sign up for that, go ahead. If you have any questions for me, or if you want to keep in touch with me, I'm on Twitter at MVS underscore Futex Live. You know, give me a shout, ask me any questions, or if you just want to say hi, yeah, no problem. And other than that, take care, good luck, and have a great trading week. And we'll speak soon. Take care.